shining star, no matter who you are.
Hello, everybody. We are back with another Rising Star episode. Very excited about this one today. Nishant, welcome to Tastytrade.
It's my pleasure.
You and I have been, I think, corresponding back and forth for probably close to a decade now.
Yeah.
It's amazing. This is the first time we've met, though.
Right. It's wonderful to be here and see all these faces that I've been seeing online.
Well, thanks so much for flying out to Chicago. I know you live up in the mountains near Taos, New Mexico, and been there once. Spectacular. Loved every minute of it. I wonder, you're the only trader in town, probably.
Most likely, yeah. Although I have inspired a friend who trades with me, and he is learning trading. So I would say two traders in town.
Two traders in town. How big is the town?
So the entire town has 5,000 people living in it, but I live maybe 15 miles from the main town, and we have a population of 1,200 people.
1,200 people.
Yeah.
You told me you were born in India, and your dad was in the army, so you traveled all around. So you really didn't even have a home base, as we would say.
Yeah.
But you came to the U.S. in the early 2000s, right?
Right.
When you were in mid to late 20s.
Yeah, I was 26, 27. Yeah.
Right.
Yeah.
And you're a software engineer.
Yes.
And so I'm just curious. When you came here, obviously you came here to work for some software company, I'm guessing, right? And what happened?
What happened? Meaning, how did I switch to becoming a trader?
Yeah, exactly. Like, how long did it? Where'd you fall? Where was there a little disenchantment with the engineering business or the software business?
Okay.
What happened?
Yeah, so there was no disenchantment with engineering. I mean,
Yeah.
I'm still a coder at heart.
Yeah.
I absolutely love coding. Sometimes if I'm just sitting around, I'll just code something because it's so fun. So, but when I was growing up in India, my dad was interested in investing at that time. And I remember he used to get these big, long newspapers in the paper newspapers, which had quotes printed on it.
Yeah, sure.
And he would send a check to Bombay, which would take 3 days to reach Bombay, to buy shares. And then after 1 month, he would get like a confirmation. And he had his physical portfolio, where he would keep a list of shares that he had. So I always heard him talking about shares and debentures to my mom. But I didn't know what that was, obviously, at that time. I was like 14 or 15. And unfortunately, my dad passed away around that age because of cancer. So that was the extent of what I learned from him, but I guess it stuck around. So
yeah, it's like a foundation.
Yeah. So it was registering in my mind, but I didn't know what it was. So when I grew up, then I started getting interested in finance and investing. I did work for a company which was into finance. I wrote financial software for them, so I was immersed in finance, and that got me interested in investing in finance.
You know, it's funny. I recently just invested in a very small company in India that teaches financial education.
Oh, wow.
So we'll see how that goes.
Okay.
But the markets over there are exploding, and they're getting better. I'll say this, and the regulatory environment is getting better for trading. So hopefully it'll be more of a global environment in years to come. When did you kind of make the transition from out of being a software engineer into being kind of like almost a full-time trader?
Yeah, so it wasn't like a cutoff date.
Right.
So I have been investing since 2005.
Mm-hmm.
So it was a slow transition, and the time when I just kind of pulled the plug on just coding was when I started seeing consistent profits. And it was a long journey. I had my trials and tribulations. I blew up my account many times. I started with pink sheets that didn't work out well. Then I moved on to shares, just buying stocks, of companies.
Yeah, you were trying to scalp or whatever, swing trade or do whatever you were with.
Yeah, so I was just buying stocks, and I was like, in my 20s, I didn't have any money.
Yeah.
So I would set aside some money from my monthly salary to buy stocks. But I quickly realized that many of the well-established blue-chip companies were trading at above $100 a share, and I was like, I can't buy anything with the money I'm setting aside. I had to stick to stocks which were less than $10, and most of those companies have problems, like they're
Of course.
unstable companies.
Yeah, of course.
And then even if you buy a company which is, let's say, $10 a share, what are the odds of that going to doubling your money in even 1 year? It's very low. So I wasn't seeing any kind of returns for the risks I was taking. And then I slowly moved on to options. So it's a long journey. I don't know what was your specific question.
Well, kind of like, I'm trying to get a time frame down, because your trading career sounds like it's about a decade and a half or so.
Yeah, it is. Yeah.
So which is great, because rising stars don't happen overnight. It's a lot. I talk about this all the time now, because it's a big part of speeches I do. But one of the keys to long-term success in the trading business is being able to hang around for a long period of time.
Yeah.
It's duration. It's whatever you're doing, making sure that you can sustain, the some kind of growth, or it's just longevity. And you're a perfect example of longevity in the trading space.
Yeah, and I believe the same. So it's all about consistency. It's not about taking 1 or 2 trades and GME or AMC
Of course.
and becoming like making thousands of dollars. It's all about small wins, and it's all about generating positive expectancy in your portfolio, so that your winners are greater than losers.
So today, in 2022, you're a full-time trader.
Yes.
And a full-time trader, living the dream in New Mexico. You have a winter pass to Taos, I'm sure.
Yeah.
You're probably an avid skier, and you also haven't given up on the tech side of your life, which is because you run a nonprofit to help small businesses in your area.
Yes.
And you provide free technical assistance, coding assistance. You're basically, it's amazing what you guys do, but you pretty much give away your know-how to help the local economy.
Yeah, and I'm really passionate about engineering, like coding in general.
Yeah.
And it's like art,
Yeah, of course.
It's like I let my creative juices flow with coding. And what I found with the community where I live in, it's a rural community, and it's not. There are a lot of poor people there, lack of access to get good education. And when I moved there, I thought that the businesses here need technical help, and there are no companies here helping out.
Like networking help, website help, stuff like that.
Yeah, website, Google SEO, anything to do with tech, basically.
Yeah.
Anything. I don't say no to anything.
Yeah.
And so they were getting ripped off by companies.
Sure.
Yeah. So I was like, that gap needs to be filled. They need a local person who they can just pick up a phone and just call them, and hey, I need this, or my website is broken. What do I do? So I filled that gap with my company, so that it generates some revenue and helps those businesses. But then what I also did was that since I'm so passionate about technology, I wanted to teach young motivated kids and give them real skills to make websites or stuff like that to earn a living.
Yeah.
So whenever I get a project from a local company, what
Yeah.
I do is I try to find a local motivated kid, and I work with them. So I'm doing the work, doing Zoom sessions or whatever,
Yeah.
and I'm teaching them at the same time.
It's amazing. So you spend about 2 hours of your day doing that.
Yes.
Which leaves the rest of the day for trading.
Yeah.
So how? I assume at this point you're pretty much a market junkie.
Yeah, I am.
Yeah. So, and I don't remember, because I've been to Santa Fe before, but I don't remember the time. What's the time change to Santa Fe? Is it 2 hours from Chicago or 1 hour?
It's mountain time, so 1 hour.
1 hour. Okay.
1 hour.
Fine. So that's not bad. So then you're basically from about 6:30, 7 in the morning till whenever.
So I wake up at 6 a.m. every morning.
Okay.
So I wake up 1.5 hours before the market opens.
Sure.
So that gives me enough time to do my due diligence before the market opens.
So tell me what your due diligence is.
So I have a long list of things I do. So first thing, I look at the futures.
Okay. Same with me.
look at the futures, look at the VIX,
Me?
and I actually trade. I trade SPY, QQQ, DIA, all that stuff.
Okay.
IWM. So I look at that. I'll switch to that
Okay.
and see where they are trading. And then what I do is I look at all the sectors, individual sectors like financials, consumer discretionary. So like around I don't know 15, 16 sectors.
Okay.
And what I do is I know you guys don't like technical analysis.
Yeah,
but
that's okay. You can do whatever you want.
Yeah, I do. I do use technical analysis.
That's fine.
And what I try to do is I see which sectors are. I do mostly swing trading. So what
Okay.
I'll do is like it's all about, and you guys do mean reversion too, but you do mean reversion with implied volatility.
Yeah, we do
I do with
implied
price.
volatility instead of price.
Yeah, so I do price.
Yeah.
I do price mean reversion. So I'll see any sectors which are overextended either to the upside or downside. And then
What do you do? Make a mental note of this in the morning, or do you do you wait for the markets to open, or you already kind of have an idea of what you're looking at? Prior?
I watch the markets like a hawk,
Yeah.
all day long. So
Yeah.
I literally know which price, which stock is trading at all the time without even looking at my screen.
Of course.
So when a stock is usually or ETF is overextended, I already know that it is, and I'm looking for signs of mean reversion, and I use technical analysis to provide some confirmation when it
It's
starts
totally fine.
changing direction.
Yeah.
And when it does that, then I
Then you jump in and make
Yeah.
your swing trade.
And then part of my morning routine is also I glance through my portfolio to see the existing trades that I have and if any trades need management. So before the market opens, I have a full plan ready for that day.
And every day is the same. I'm basically the same person. I mean, we do a little bit different, we have a few different little nuanced things, but we basically do the exact same thing. But then you, me, and a million other traders do it too. I mean,
Yeah,
that's just the
yeah.
way we think. It's all the same type of stuff. Are you pretty much product indifferent at this point?
When I started out, I had a really small list of stocks in my watch list, like around 20.
Mm-hmm.
Because my whole concept is that you need to be so intimately familiar with the price movement of your stock so that you can spot when the stock is overextended.
Okay.
So it was just 20 stocks. As I gain experience, now my list is around 200 stocks.
Are you doing futures too?
I don't do futures.
Okay, so you just watch the futures, but you're not trading the futures options.
Yeah, I don't. Yeah, I watch
Yeah.
the futures, but I don't trade them. So around 200 stocks in my watch list, and then since I'm a programmer, I have written scripts which help me because 200 is a lot to go through every morning.
Yeah.
Although I actually love doing that because I deliberately make an effort to know which stock is trading where.
Okay.
So by manually going through my watch list, I'm not disconnected. I'm always engaged with every stock.
So as the day progresses, now I'm jumping ahead here for really what I want to be, but I'm just curious to get your mindset. As your day progresses, a lot of times the market will do kind of what you think it's going to do early in the morning. But there are other times, like this morning, just as a perfect example,
Yes.
where we had a huge down opening, and next thing you know, we have we're up huge.
Yeah.
The market can change direction, like on a dime, as they say.
Exactly.
So sometimes you have to make adjustments. How often do you think you adjust stuff during the day?
Okay. So I try to keep my trading life really simple. So, for example, I don't do rolling.
What do you mean you don't do rolling?
I don't I do options, right? So
Right.
I don't roll my trade. So my rules are very simple. So I do vertical spreads, but I do debit spreads mostly. I sometimes do credit spreads too, but mostly debit
It's the
spreads.
same thing. Debit, credit, same thing.
Yeah. So with debit spreads, I do I buy ATM at the money spread.
Sure. That's what we do.
And my goal is to I shoot for 94% profit on that every trade that I do. So let's say I buy a dollar white spread on QQQ. I buy it for 50 cents and I sell it immediately. Put a closing order for 97 cents at that time, which is 94% ROI on that trade.
I would do that too if I could pull it off, but I don't pull it off that often.
So yeah, so that's what my bread and butter trade is. And then what I do is instead of if the trade starts going against me, which it usually does because it's mean reversion trading. So with mean reversion, the whole concept is that you are keeping the long-term trend in mind, but you are going against the short-term trend when you see signs of the stock or ETF.
Understand completely. Yeah, I understand completely.
So if the stock goes against me, I don't really. My trade lasts for 30 days. Every trade lasts for 30 days, and if by day 15 the trade is not going in my direction, then what I do is, if the trade has lost 50% of its initial value, I close the trade. So that's how I handle my losers.
I like that.
Yeah, and so going back to your question, that if we have a ping pong day like today, right? Market, it doesn't bother me much because my outlook is 30 days. And I do my due diligence before entering the trade. So I have been watching that stock for a long time to enter into a trade. Once I put on the trade, all I care about is following my rules about loss management and profit targets. And I'll give you another example. So
how often do you trade?
So every day.
No, I know, but how many times a day? Do you know?
So how many times a day? I guess I take all of my trades in the first 2 hours of the market opening.
Okay.
Yeah. So let's say I take 3 bullish trades for one expiration, and the expiration is 30 days away. By day 14, half of the time, the trades are flip-flopping and not deep in the money.
Of course.
What I do is, if I see any signs of the market's futures, opening really deep red on any news, I start retrofitting that expiration with bear put spreads. So let's say I have 3 bull call spreads. I'll add 3 bear put spreads, so that if the markets turn against me, let's say market is showing a 300-point drop at open. So what that does is that I don't make any money from the expiration because it's canceling itself out.
I understand.
Yeah, but I don't lose anything. But if by day 14 the trades have gone in my direction and they're deep in the money, then I don't care, because by that time I'm generally safe. If within the first 10 days you will know if your trade is going against you.
And how far out? The positions are 30 days out when you put them on?
I'm sorry?
You're 30 days out when you put the positions on?
Yes, 30 days out, yeah.
So, what's interesting about you is that I don't remember when I first corresponded with you, but this is very typical for Tasty because we go on for years, decades with people.
Yeah.
I don't remember the time we first corresponded, but do you remember how you found Tasty?
I think when I got interested in options, being an engineer, I have a voracious appetite for reading. I read 60 books on options in 6 months.
I read that in your bio. You read 60 books on options.
Yeah. And then I wasn't satisfied enough, because I was I need to learn more about this, because this is not what I was looking for. So maybe I was on YouTube and I may have found a video of you.
Uh-huh.
And then I just got hooked to Tastytrade. I mean, I watched every single segment that
this
you have
is like
aired.
2012?
2011, 2012, maybe that time.
That's right when we started Tasty.
Yeah.
And the funny thing was, in 2013, you had, it was your daughter, Shyla.
Yeah.
She called into the show.
Yeah.
Did she call in the show?
She was 5 years old. So
she was 5 years old. You sent me a video.
Yeah, I sent a video. She
You're
didn't call
right.
in.
You're right. Yeah, you're right. She didn't call. I know she didn't call on her own.
Yes.
I wasn't sure. Oh, you sent me the video of her.
I sent a video of her explaining what time decay is with the example of a melting ice cream.
Yes, we're gonna show that in this video, because you're gonna love it, because your daughter's very cute.
I sent you a video on time decay. Can you please play my video on time decay? This was sent to me
Actually, you didn't send it to Linda. I sent it to Linda last night.
Okay, well, we both did that. But this is from a customer who put together a very small, one of our listeners who put together a small video on time decay. And I think
brilliant job with that.
I think this person should review all the Wall Street Journal things.
Today's lessons on the stock market is time decay. And what does time decay mean? Time decay means that when you buy an ice cream and when you just hold it, then it melts away. So when you buy an option and your stock market goes sideways, then it's melting away. Thanks, guys, for listening to me. Bye.
That's perfect. That's beautiful. And she should walk into some rep's office with the lollipop in her mouth and teach them about that.
She's 6. Okay. She knows more about time decay than the editors of the Wall Street Journal. She explained time decay beautifully with ice cream pop and explaining option decay. That's all it's about. It's about reduction in cost basis because of time decay. She can explain it, but the editor of the Wall Street Journal, for whatever reason,
Cannot.
or one of the editors has no idea what she's talking about. You know what? That 6-year-old, just let's move her to the top. She should be the managing director or the managing editor.
And she's, so let's see, that was 2013. She was 5, so she's what, 15, 16 now?
She's almost 15.
Almost 15.
Yeah.
Amazing. And she still trades.
She still trades, yes.
That's when I say still trades, she's only 15. But when did she make her first trade? When she was like 7?
Probably, yeah. Yeah. So, and like I was really inspired by your segment called Where Do I Start with your daughter Case in it.
Yeah, yeah.
And I was like, this is so amazing that Case is so young and she's learning all this stuff from you.
Well, she was older than 5.
So I was like, I need to immerse my daughter in this financial education from now on. And just
Yeah.
like how I was telling my dad, like he used to talk about stuff with my mom.
Yeah, sure.
And
it sticks.
It sticks. So that was my whole thought process, that I will just immerse her. And, I don't force my daughter to do anything.
Sure.
So I like, at least expose her to what all lies in the world of investment and financial
So
education.
let's talk about, the whole rising star thing is very subjective by us. It's like, person A could be a rising star because they've made 10,000 trades, person B because they've made, $10 million, person C because they've changed their lives, whatever it may be.
Yeah.
What's your rising star moment? Like what do you think that, you reached out to me and said, hey, Tom, this is, I think I'm a rising star. And was it a certain return on capital? Give it to me. What do you think?
Okay. So I would say that, like I was sharing with you, that, becoming a full-time trader is a process. It's not like on someday you wake up and you become a trader. So for me, that if you were to ask me what was that moment, it was the day I had more winners than losers. So the positive expectancy in my portfolio, that I could see that, yes, I have losing trades, but overall my portfolio is gaining value. And then what I started doing was I was doing an experiment on my own. I would take $2,500 and see if I can grow it into 25,000, which I know it sounds like crazy, big number, in a year's time. And I was able to do that consistently, but just by doing debit spreads and having a list of rules. And I did it many times. And in fact, I shared with you that in 2019, I started with $2,500. And again, by 2020, I grew it to 25,000. And that time what I did was I was like, let me try to see if I can scale it up. So I continued that. And then by 2021, November, I was able to take it to $210,000. So the same
That's
trading
amazing.
methodology.
You took 2,500 to 210,000.
Yeah.
Without adding any more money.
No, not adding any more money. It was just repeating the same method which I had been doing for many years, but just scaling it up by adding more contracts.
Yeah, sure. No, that's fine.
Yeah.
But that's pretty amazing because a lot of people will start with, a few $1,000s, and my argument is, listen, I don't want to tell anybody they can turn 2,500 into $200,000 because it's not fair.
Yeah.
There's obviously a few people that are outliers like you that have done it, but I don't want to tell people they can do that because I don't want to set crazy expectations. The other side of it is, I also don't want people to get discouraged thinking, well, I'm just going to lose $2,500 because that's not the case. And you're a walking, talking, living example of that. And you said you've done it multiple times from 2,500 to 25,000. That means you've also had some bad streaks too.
Yeah.
And talk to me about some of your bad streaks that you've learned from.
Sure, yeah. And so I have blown out my accounts many times. First of all, let me start with that.
Yeah, okay.
And that's how I learned.
As we all have.
Yeah, that's how I learned. And I was sharing with one of your team members, Jules, that
Sure.
What I did for many years was that I would start with 2,500, and the moment I would hit 25,000, it could be any target. It could be like, let's say your target is 10,000, right? I would withdraw that money and put it into my bank account and reset at 2,500. And the reason why I did that was because when I was learning trading, I have done this many times, that I would grow my account over a period of 2-3 years and just celebrate my paper victories. And then one bad correction, like 2022, one bear market, one bad correction, like brings you to zero. So that was a very defeating feeling. And so what I did was every time I would reach a target, I would withdraw that money and start all over again. So because of that, I've had some failures when I was trying to do my own 25,000 challenge, I call these. But the thing is, it doesn't cause a big dent because I keep withdrawing money from my account. And the bigger the 2,500 to 210,000 achievement that I made, that was my first experiment into can I scale this method.
That's great. Yeah. I mean, that's unbelievable. There's a lot of things you do, like taking the money out of the account, like the long debit spreads, regardless of volatility, the more directional swing trades. There's a lot of things you do that we don't really we don't preach here. We have a different style of trading. We don't play for mean reversion and price, although we do naturally. We don't talk about it, but they're more for mean reversion and volatility. But it's so funny. The important takeaway is that a lot of people are going to realize that there's lots of different ways to play this game.
Yeah.
And that's what I love about it.
Me too, absolutely. I totally agree with you. And the thing is, you can be as creative as you want. And what I realize is that with trading and options in general, you can come up with any trading methodology that you want. Only thing you need to do is have rules in place and stick to those rules. What's
your big rules? Give them to me. We're going to wrap it up here.
Okay.
I think, I'm running out of time here, so I'm going to wrap it up with your big rules here. Give me your top. You give me your top three.
Okay.
I know I'm putting you on the spot here, but give me your top three rules.
Sure. Okay. So, rule number one would be finding the right stocks to trade. Right. So trade options.
Okay.
So maybe you have a price criteria, liquidity criteria.
Sure. So I have a liquidity criteria first, price second.
Yeah. So I have 10 items in my criteria how I select stocks. So that's one rule. The second is when to enter trades. So you don't have to trade every day. I mean, I take between 700 to 1,000 trades a year. So I'm not like you guys. I don't know how many trades you take.
Like 15,000 probably.
Yeah. So you guys are up there.
It's insane.
So I do 700 to 1,000 trades.
That's good. That's 700 to 1,000 trades. That's legit. You're a full-time trader.
Yeah.
Sure.
So the rule is I have clearly defined rules of when to enter a trade, whether it's using technical analysis or watching the markets in general, the macro environment, avoiding when to get into trades like earnings events and all that stuff.
Okay.
And then, like I was telling you, that positive expectancy is such a big thing that I keep in mind, that when trades go against me, since my trades are 30 days out, I don't panic if on day one
that's great.
It starts going against me, because I have rules for cutting my trades when they start losing. So I have this 50% loss rule that if a trade loses 50% of its initial investment, then I cut it. And as long as I can maintain that winners greater than losers equation in every expiration, that's all I care about.
Yeah.
And some years are great where you can grow 1,000%. Some years are not that great, and you are just
how has the down move in 2020 been for you?
2022.
2022. Sorry.
Yeah. So this year was unprecedented, as you know. I don't know how many decades we have seen this. Six months.
It's been a rough first 6-7 months. Yeah,
it's been
8
a very
months
rough
now.
year. So I only give you 3 rules, but I have many more rules. So one of the rules I have is that I only trade 30% of my portfolio. So I always save 70% cash in case.
Don't worry, that's one of our rules too. So we're good. Yeah,
okay.
Pretty damn close.
Okay, so I save that cash all the time, no matter what happens, no matter how good I feel about the markets, in case the markets turn against me, so that I can bail myself out of a bad situation. So once markets start going against me, and I start seeing, and what will happen is, since I do a lot of bull call spreads, let's say I have 5 trades on, and for next 4 weeks, and markets start going against me. If you go into a correction, like a 10% correction or something, all those trades have the potential of becoming losers at that point.
Of course.
So what I do is I wait for the markets to take their time, fall wherever they want to, and I use technical analysis to spot when they might be turning around. There is no guarantee that they will turn around.
Of course.
But when I see higher highs, higher lows, there are simple things you can do to see they are turning around. Then I dip into my reserves, the next 30%, to take one additional trade for each of the losers that appear to be losers. So I try to balance out that way.
It's another thing we don't do. You break a lot of Tom's rules here, but it's okay because it works for you.
Okay.
I mean, I'm all for it. Nishant, that was a really good discussion. And I think my favorite takeaway is just that everybody can have different, little bit different set of rules as long as you're committed to the course, as long as you're committed to as long as you have the passion to commit to the space. There's lots of different ways you can approach it and get from point A to point B, and you've clearly shown that. Continued amazing success. I hope your daughter keeps trading as well.
Yeah, I hope so too.
And let's stay in touch, see how it goes. This was a great talk. Thanks so much.
Yeah, thank you so much.